The Fed has been printing trillions. The Bank of Japan has been printing for decades. In the end, there can be no recourse for a central bank that is trying to destroy the value of their currency. It will never end well. You came here for the truth, so let me unveil that for you. Today we're going to look at Japan. Let's begin. This is directly from the Bank of Japan's website. You can see the statistics for yourself. This information is from January of 2018. I'm going to show you charts that correspond to this data. So take a look. Bank of Japan month-to-month change in assets. Can you believe it? There is actually a negative value for December 2017. I was completely shocked. I was so surprised by this information. Out of all central banks, the Bank of Japan, this just didn't sit well with me. I kept looking into it, found some more information, so let's look. This is the first decline since 2012. But what I want to note right off the bat is look at where it's come from. I mean, we are talking about already, even at this level, extremely high rates of central bank, they call them assets. Their balance sheet is massive. And that's going back into the late 90s. This chart, it's not even showing you where it began, even before this. Okay, they've been printing literally for decades, constantly keeping mass quantities of the worst garbage on their books. That's where the Federal Reserve gets their program from. It's a Japanese program. All right. Now we've seen this sharp rise ever since, let's say, after the financial crisis. It has really come up. And now this is the first decline since 2012. Again, we're talking about a minuscule amount when compared to the total. But could it be a trend? That's what we need to follow. And of course, you'll get that here at the Money GPS. Bank of Japan total assets, first decline since 2012. Now you're going to see this, probably looks small on your screen, but there's this incredibly marginal difference. This is zoomed in, basically, same information. Increases have been tapered. So you'll see these steps here, but to some degree, there's been less and less of an increase, right? But again, it's marginal. They're suggesting that, this is sort of the top of the curve and maybe they'll start to unwind and bring that down. I don't know if that's the case, right? What I do see is that the Bank of Japan has promised to do whatever it takes to keep the market propped up. Many cases, they've talked about that. Whether it was the Prime Minister, whether it's Kuroda, doesn't matter. They have been saying we're going to make sure this thing continues. All right. At the same time, though, are they tapering? It could just be a fluke, could just be 1 month, maybe 2 or 3. There's a bit of tapering and then it just continues upward. It all depends on what we see coming from the markets. There is one fact, however. The market cannot sustain $15 trillion of garbage being thrown back in. This is what the Federal Reserve is doing, for example. It's not as if they're selling their so-called assets. They basically let them roll over. And they basically just push it off their books. Right now, they're engaging in programs here within the QE3. Yes, it did end, but they still have that on their books. They need to basically keep it at a certain level. So they're keeping it at 4.5 trillion. They do so, they buy some, they let some roll over, they buy some, they let some roll over, approximately keeping it within that 4.5 range. And then we have a little issue here, because when there's no other prospective buyers, what do you think is going to happen? Remember, I didn't say it. What do you think is going to happen? The lender of last resort is basically just going to dump, within a period of time, however long that takes, is going to dump trillions of dollars worth of garbage, and that's them stepping away. It's not as if they are the ones to be there to back it up. That's the whole point. They're there backing it up. They've been doing so for 10 years. And yet, we'll have to see, regardless. Look at this. Bank of Japan 12-month change in assets. Tapering begins. It's been going on for a little while, according to this chart, using the Bank of Japan's own information here. Remember, this is a 12-month change. Looking at it, it tells me what they're planning on doing. Now, this isn't the only time there have been declines. It's obviously more severe than the previous times, but it could just mean that it can go up from here. This is, since the financial crisis, we've seen a big run up in here, and at this time, somewhat of a significant decline. I really need to know who's going to buy these so-called assets. Not investors. They're not going to do it. The hedge funds aren't going to do it. It's extremely questionable what they're planning on doing here. And then we turn the page over to the Fed, everybody's favorite. Federal Reserve total assets. QE unwind, and they say baby steps. You probably can't even see it on your screen, but right in here, there's a tiny, tiny little downward trend that has formed. Extremely small. So we're at this level here, 4.5 trillion. It's going ahead, it's going across. The Federal Reserve is keeping tabs, how much is on their balance sheet, and they make sure to maintain that. Look at this. It seems as though there's this minuscule change, and will it be a trend? That's what we need to focus on. Is this a trend? We'll see that in the coming days and weeks and months. Look at what had happened. There was $800 billion before the financial crisis. 800 billion. So we have QE1 and all the way until today. Look at it like this. Central banks around the world intend to pull back, this is according to their statements, intend to pull back $1 trillion in their garbage, rein that in, prevent it from going back out, and let the market handle it. $1 trillion of taper. You tell me, can the market sustain that? I don't think so. There's $15 trillion that we know about that the central banks have printed up. They put them on their balance sheet, and there's no way to reverse course. You know, I just did a video that is very interesting. If you haven't seen it already, it's talking about the Fed. The transcripts back in 2012 actually shows them admitting what they do. They're shorting volatility. They are basically suggesting that if interest rates rise, the market is going to take a tumble down, and there's basically no stopping this destruction of the dollar. They talk about the fact that, this is the whole transcript, but anyway, you can see the other admissions that take place in here. Basically, What I have been talking about has been proved, documented, and outlined in this report. It is directly from their own website. This is not doctored. This is not some information I found on some random site. I always show you the source. If I could find that source, I will show it. Or if I don't have the source, and I think it is extremely important, I might mention it, but ultimately I probably won't even do a video about it. There's so many things that I've heard about, talked about before, that I really can't show you, just simply because I don't have 100% concrete proof of it, and I don't want to be one of those people. So that's all. I hope you found this video informative. If you did, please give me a thumbs up. When you do so, it helps to support the channel, so I am very grateful when you do so. Thank you. And last but not least, if you found this video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. Links are in the description below. Take care. Okay, 3 a.m., much past bedtime. Good night.